Hey, good afternoon, everybody. This is Dennis Wilborn, the Active Trend Trader. Welcome to On the Radar live market updates. And this is the 2nd of February, 2021. Want to take a look at all the indexes and a couple of stocks and a real good tip for you on how to improve your ability to stay on the proper side of the trend. And so we'll get into that most skosh. If you join us during the record or during the live session on Instagram, I want to say thank you for joining us. I have been having some, my system has been having some bandwidth issues. And one of the things that I'm working on that, getting that fixed up and getting it taken care of. I think we've made a correction that will help us get into the proper, or where it will record all the way through without stopping in the middle. And so, which is nothing, I don't want to put out quality, videos with that quality. I want my quality of my videos to be extremely good. And so, I think I found part of the fix to that. And so we'll move forward with that and progress on. And as always, if the first video that I record during the live session, if it is not worth watching because of the quality, I do not put that out on the, I try not to put those out on YouTube. I basically just re-record, and that's exactly what we do. We're back in the re-record session. So anyway, because I want you to get good stuff from the active trend traders. Yeah, talking about good stuff, that's a good segue into you see this, you can probably see that autopilot trading logo. That is our new logo for autopilot trading. We're going to be having a kickoff session, a free webinar to basically present the concept of autopilot trading. Those who've been following us for a while, we do it with the top 5 growth stocks. Now we're expanding to include leveraged ETFs. I'm hosting a free webinar this coming Saturday at 12:30 Pacific time. And it's the information on that is leverage non-monetary assets, or how to leverage non-monetary assets to build wealth fast. And so it basically will provide you some structures onto how to become more consistent and systematic and have a routine to your process, a routine with your trading, so that you can grow wealth without having to sit there watching the market all day. You don't have to watch the market all day to be a great trader. And we've proved that at Active Trend Trading again and again and again. So we'll take that off and we'll jump into the rest of the session. Really nice. I'm really proud. My son had a gentleman do that logo up for us. And so I am really pleased with that. There we go. That disappeared. Now let's jump into the S&P. One of the things about coming after the market is closed, it gives us, whatever candlestick was given, it basically took place for the day, it's done. So now we can fully interpret that the way it's supposed to be interpreted. Candlesticks are really great for predicting reversals and all that kind of stuff. They tell us when or where, but they don't tell us how much. Once we get a reversal signal, that we have to rely on technicals for. I learned that from Steve Bigelow many years ago when I was getting my credentials with him as a certified candlestick technician. So looking at the S&P, what are we looking at and what do we see? First, we have a sell-off down into the 50-day moving average. Of note, going back to October when we came out of this, the correction that happened, that finished up in the last of October and went into a huge rally the rest of the year. This is the first time that we've been back to revisit what? Revisit the 50-day moving average. Oftentimes, bottoming can be more like an event. Topping turns out to be more like a process. And so where are we in the process of topping? We came up, we hit the upper level of this this uptrend channel. We broke through it to the downside. Price action stopped right at the 50. However, that's the first time we hit the 50 in a long time. Now we can hit the 50 and we can go rocket shipping up, and that's no problem. However, we want to watch this rebound. This rally attempt will tell us something. One, what are some of the things that we have in place? And you can use this as part of your trading tip for today, is we came down, here was a lower, here was a swing low. Well, we just put in a lower swing low. So what's going to happen next? If this high here turns out to be the high for this move back up, or we could even get up a little bit higher, closer to the level where we did the reversals before. It could get all the way up there. But as you can see, price action started hesitating as it approached these past highs. Why is that? Well, the major reason why price action does that is because there's a little group of sellers up here. Why are they sellers? Because they were unwise buyers, and we want to be wise. We want to buy when it's the good time, but they were unsophisticated. They got wrapped up in the moment of excitement, going. And if you watch the the GameStop and the AMC trades, there was a lot of chatter online about, oh, it's going to the moon, blah, 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 blah. And, that's what they used to say back in 1998, 1999, and 2000 about the dot-com companies. It's going to the moon. It's going to be different this time. And unfortunately, while I love the strategy, the strategy these guys use to get the hedge funds to have to kick in and start rolling in and covering their shorts was brilliant. I mean, it was absolutely brilliant. But now the inertia of the big guys are starting to take over. So, will they squash us small guys and get us back in line? I don't know. The retail investors has got to be looking for mechanisms and ways to benefit from what the institutions do, but also occasionally to take advantage of what the institutions do. And one of the big things where we can take advantage of them is they are very slow in how they move. And so if we can start to see where they are starting to do their moves, then we can get in on the trade, and we follow the wake of the boat and let them pull us along with them. And while, some of those huge gains that they made in GameStop and the other, some people made them. Some people probably got taken to the cleaners on them. Now, is that a good or is that a bad thing? Or is that just a natural thing of the way the trading nature should be? Go back to the bubbles, going back to even the tulip bubbles back at one of the earliest bubbles. When it burst, there were a lot of people that got hurt by that. But in a way, that's kind of the way the market cleanses itself and gets rid of the weak hands. And then it starts all over again with, in building up. So there's, we could go into a lot of different things on that, but I'm not going to. So the SPY is starting to run into pressure up here towards the highs. What's going on after hours now that we're, I'll just take a real quick peek. Let's take a look at what's going on after hours. Is after hours showing us that that it possibly, actually pushing up just a little higher after hours? We'll see if that continues to be so. Here's where it's finished. And let me see if that's, that should be tomorrow. Yeah, starting to push on up. So who knows? It may work out. The S&P after hours are painting up here at 382. And so that's more or less right back up at today's high, just slightly below it. So we'll see what happens. We do have if this in fact turns out to be an important high, then we'll watch for a potential reversal and turnaround. What about let's go over to the Qs and take a look at the Fibonacci's to see how the Qs handle it, because the Qs almost did a full round trip from low to high, as you can see here. Similar type picture though. We take out a swing low, which actually the swing low on this one, we could say that that's a swing low there. Not a very good one though, because that's a one-day candle. But clearly this is a swing low back here. I would set an alert on the Qs down here at 310, right there at the $310 and let's see what it says here, 310.58. I would set an alert right there. If price action takes that low out, or now if this in fact turns out to be the high and we reverse down off of this, and again the Qs are up about $1 after hours too, but of course we're still a long ways away from the open tomorrow morning, so we'll see where they wind up. But if we push back down, take out this low, that would be telling us that, okay, we now have a lower high in place, and we just take out a lower low. Where might it go if that were the case? Well, to keep an eyeball on that 50-day moving average, like the SPY and the S&P, as you can see, it came up from the October's lows, and it was respecting the heck out of the 20-day moving average. Respect, respect, respect. Bam! Friday. First time it hits off the 34. Bounces back up. IWM. Now, the old adage about IWM, and oftentimes that IWM will weaken earlier, and it tends to be kind of like the canary in the coal mine. It will basically lead up and lead down. This was a nice move to the downside. Let's see if we can get a little bit as we see here from here down to here. What was that move? And let's just grab that and down to the low. That was about a 6% move. Now I would like to see more like about a 10% move to really unload. If we start dropping 10%, that's going to put us down around the 50-day moving average, maybe slightly below it, but right square dab back into what? Look to your left, past levels of support, past levels of support. Take a look at the weekly chart on this. As you can see, it basically, the IWM burst out back in, here was the October reversal right there, October 30th, right about there. And it just rocket shipped out of here. Now we're doing a nice consolidation. So I'm still keeping my eye on 204 and 205 up to 214, 215. Go back to my daily. And as you can see on the daily, oops, that's not the daily. That's the half-hour chart. And blow it up just a little bit. So on the daily, as you can see, the price action is broken back up. Didn't quite, again, broke below the past, support levels of the 20. That's starting to hammer that down. Did not reach the 34. But we're starting to get this process where price action is going down and starting to hit on the lower moving averages. In other words, it'll start hitting on the 8-day, and then it'll start hitting on the 20-day, and then it'll start hitting on the 34, and then the 50. And all the time, what that's doing is bending the moving average over until you finally get that rolling over top, and then that's when you can expect some, stronger downside moves. What's going on? The momentum on the weekly stock charts has turned over. It turned over last week with the bearish engulfing on the Russell. That bearish engulfing is still intact, and we expect it to stay intact unless price action moves above the high from last week, which equates to this high up here at $217.91. Now, your tip for today is when you are anticipating, yes, this was a larger bearish move. One could have said, hey, I'm going to trade this bearish move down into at least the 20-day moving average, which would have been fine. That was a nice move down. And then we bounced and rebounded up from that. But our bias on the market should have still been, guess what? Bullish. Why is that? Well, one, even though the moving averages started to roll over and started to bend over, They have not crossed. And so even though prices wound up below, this is just a pullback. This is just a flag. And as long as the moving averages are stacked with a bullish stack, in other words, the smaller moving averages above the larger moving averages all the way down, that is a bullish stack. And that oftentimes means that price action is going to continue to move in the direction of the bullish stack, even though you may get a slightly deeper correction. Let's move it back here a little bit, and I'll flip this. We'll flip the switch on that to give you hopefully an idea of, here's one right here. Price actions kind of moved down to the 20 and then broke down. And then a little bit later, we get a crossover where once you get this crossover, oftentimes that's your indication on, this is an 820 crossover. Some people use a 2050, some people use a 3050. But if you're using this crossover, any type of then pullback back up into the moving averages, as long as they're starting to face down, that should be an opportunity to do a bearish trade. And as you can see right now, as long as the moving averages stay, the short one to 8, above the 20, above the 34, above the 50, let your buying be biased or slanted towards, I want to be long the entity. Just keep that in mind. And so if you do take a counter trend trade, take your profit quickly, or at least partially part of your profit, and also keep your stops tight. In other words, you can use the highs of the candlesticks going down. If you break above the high, say, hey, by 50 cents to $1, get the heck out of Dodge. Get out of town. So let's take a little quick look. So there's your tip for today. And so let's take a look at two of the stocks that I am looking at. We traded this stock, CHGG. Turned out to be a really nice trade. It is still in it. But some of the things that I'm watching in all the stocks that we're trading on the growth stocks is what's it doing when it gets back up into the levels where it sold off from before. And as you can see, and I'll just highlight this on CHG, is as it's gotten back up in these past highs, look what's happened. The upper wick on these candlesticks showing selling pressure. Same thing on the wick from today's candlestick. Look at that. It's a little bit longer, but this is one of the reasons with our autopilot trading top 5 growth stocks. We planned this trade 2 weeks ago. We got into it down here about the 92, I want to say about the 92.50. So actually right about there, 92.50, we got into this trade. We bounced up. And one of the things I like to coach people to do is take a little bit of profits off when it approaches past known levels of resistance. Or we'll use the Fibonacci's to identify potential levels of resistance. And sure enough, this rolls up, pushes on up. Today I had said, if price action gets up to the middle of this candlestick right here, which this high here was $99.11, right here, this candlestick there. I said, so if prices get to the $99, I want to sell half my position. Now I'll hold on to the rest of it, make it break even, because again, this is stacked to the upside. So we could get a nice runner. We could get a huge move moving into earnings, and CHG has earnings when? On the 8th. After the market closes. And so, yeah, I want to be riding this up until earnings. And then if I'm not at least up about 10 or more %, I will sell the rest of what I have. And my current, on the second half of the position that I do have, I'm break even on it. So worst case scenario here, I would close the position out, break even on the second half, and I would have taken my profit, which in this case was about a 5.5% profit on the first half of the position. And so nice trade, and this is what the autopilot top 5 Growth Stock members, they get all the notifications on when this, how to put in the order, where to put in the order, where to take the stop loss, where to take your profit targets every Saturday, so you can be all ready with the trades coming up on the next week. The other is Lowe. Lowe's has earnings coming up. And the other thing that Lowe's looks very interesting, it looks like the TSI is trying to turn back up, a nice bullish harami today. And so I'll be looking at potentially doing actually I've got a trade in to do a call debit spread with the 167.50 by 172.50 if prices get back down here to about 165.50 to 165.60. I can also buy low at that level. I can also, it's between now and earnings are coming up when, let me get the earnings date. The earning date is coming up here on the 24th, before the 24th of February, before the market. And so what I'll do is I'll say, okay, I can go out to the week before the 24th or the week of the 24th and buy an option, a call option, actually one that would maybe be one strike price out of the money, but the expected move of about $12 would take prices action through that. And I'll look at seeing about the 165.50 level, 165.60. That would be a great place to go ahead and put that on, with a stop loss if we break back down below the 786 or about $160.74. That's the way I would want to be looking at trading this. So, okay, guys, that's what we've got for today. I hope that you enjoyed that. Remember, if you are, if you would like to learn more about autopilot, if you'd like to learn more about being a consistent trader and developing a consistent systematic routine and leveraging non-monetary assets to build wealth quickly without having to watch your screen all the time, your computer all the time, drop a note down in the comment section if you're watching on Instagram, or if you're watching on the YouTube channel, drop a note in the comments and just say, hey, Dennis, send me the link. And also, if you can find it at I will be putting on my Linktree link, which is in my bio on Instagram, the actual invite so you can join the webinar. We're open to only the first 100 people, and we already have, I was checking today, we've only came out with this announcement on this on Monday, is we already have like 30 plus people signed up for it. So if you want to just come and see what we're talking about. It might help you, for free. It may help you design your own strategic plan and improve your own consistency and routine for your existing trading. So with no further ado, I'll say aloha, God bless everybody. Have a great rest of your Tuesday.